Hello, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern on Wednesday, the 11th of July, 2018. Thanks for coming back and listening in and chatting if you're on YouTube's live chat. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, you may have heard that yesterday at approximately 9 minutes to the futures close, an announcement was made by the U.S. White House that tariffs are being imposed 10% on $200 billion in China goods, sending the market into a bit of a tizzy, dropping as far down as 27.65.75 in the ES from the closing price, about 30 some odd points. I forget what the number is, 34 points, 30 points, 30.75 points. The Chinese market's corrected about 2.4% at the worst of it, I think, at least last I checked. And the market has not recovered very well since then. Just now, news came out from China at about 7:55 Central, about 10 minutes ago, that China is considering non-trade measures to retaliate against U.S. tariffs could delay merger approvals as one such tactic. So trade war is full on, and we are likely to see some volatility today. We did break lower, but we didn't really extend that far. We pushed right to the low of the gap zone we left behind from the 9th, from the day after non-farm payrolls, and we've been holding steady, China. And so that's where we stand. Risk off today. Risk off. The money has moved into the U.S. bond. The U.S. bond is up 12 ticks or 0.26%. The 10-year notes up 5 ticks, up 0.13% on the futures. The Japanese yen, the Bund, and the euro. The cable's off by just 3 pips. But everything else is red, including crude oil. Crude oil down 1%, trading at 73.38 on the August WTI contract. The worst hit is the DAX, down 1.5% or 190 points. So clearly, again, risk-off sentiment. So the question today is, and by the way, the SOC, or the scene of the crime, or the point at which the auction was interrupted for this news, was 27.97. 27.97. The high yesterday was 27.97.75. The high of yesterday's overnight session was 27.97.75. And the high of today's overnight session is 27.97.75. We left a weak high yesterday in the ES. I'll go over that in a minute. But from there, we just dropped quickly, and we'll take a look at that in a moment. What the calendar has in store, this morning we got the PPI numbers at 8:30 Eastern, 7:30 Central. You could just look those up for June. And for today, we get wholesale inventories final for May, which is a low importance number since it is a final number for May. And then we get crude oil at 10:30 Eastern. The speaker calendar looks very busy. We're left with ECB Speaker Nui, BOE Carney, and Fed Speaker Williams ahead. Other than that, we're not really seeing much on the calendar to discuss. Let's take a look at what we expected yesterday versus what we got. Yesterday's primary scenario is for the market to open sideways, test up into the 94 quarter multi-zone there. Remember, I marked this right here. Boop. Actually, that's not the color I wanted. Fuchsia does not suit my eyes very well. This confluence zone here of stock zones, 94 and a quarter and 96 and a half. From yesterday, I expected a fair amount of resistance in this area. So the expectation was for an open auction that drifts up and then eventually goes and tests the prior day's point of control area down into the 2785 area or so. And a bounce back. I was looking for, as I said yesterday, a balanced profile. It didn't quite happen as I expected. The market ended up pushing to, as I said, 27.97.75, which was the overnight high, as I discussed. It squeezed deep into those two zones, but the short setup, and I talked about this setup short into this area. If we drift up in there, the short setup did work out for a test all the way down. But the best we could do yesterday was 27.88 and a half on the low. So that didn't even breach into Monday's range, which leaves us with like a 5-tick deep gap zone from yesterday, following the big gap zone we left behind between Monday and Friday. So buyers firmly in control, buyers getting paid. For those of you who are on at Convergent Trading, the recap covers all of this, the trade setup, the risk, and all that stuff. Volume way off, 727,000 contracts versus 1.1 million as the mode or the most common. Range was only 9.25 points for the entire session. So as I said, market pausing and summer trading is in full effect. And the conclusion is that buyers are continuing to explore higher. They're doing a good job discovering higher prices and holding value higher. And sellers are active. We see them on the volume scope, the footprint, but they're not getting paid. Sellers are not getting paid currently for their efforts. So today, I wrote all that before the news came through. The expectation was for today to be a balancing day. So here's what actually happened. Let's clear this out. So this is the normal, what I would call the normal width per bar. And you can see that yesterday we had a ton of rotations, not much range, but a lot of back and forth, back and forth, back and forth. So we get a lot of bars on a 5-pixel wide candle. The day before, if you recall, had only occupied about 75-80% of the screen. It just gives me a gauge based on a 2-tick Renko of how busy the session was. Here's what happened yesterday. This is the trade that I was looking at, a push into 94.75. There was another stock zone up here that was removed. And then again at 96.50, 27.94 a quarter, 27.96.50, a planned scale-in trade. And then it pushed 27.97 with a poor high, just poor highs all over the place over here. We are right in front of this 2,800 century figure, big strike price, before it rotated over and then eventually extended the range down. So what we have yesterday's range extension up, right? So that gives us a normal to normal variation day, depending on the extent of the extension. And then we had a range extension down into the prior days, towards the prior day's high. And we just got 27.8850 before we bounced back up. We exited the IB and finished near highs on a weak high. So all things, had we not been interrupted by the news, we would have found this morning a higher overnight high with a high probability. That would have been my bet. Higher overnight high, likely in the 2800 to 2801 or 02 area. as it squeezes shorts into the century figure. And then coming in today, we would have found ourselves most likely back in the range, on the upper end of the range, somewhere in here. So the overnight session was expected to push, flush some shorts, and then come back and consolidate back in the range. However, here's where we are. This is where we're trading right now. 27.76, we're in the range of Monday. We're beneath that key low volume node that we have from Monday at 27.79 and a quarter, 27.80, big area. This 27.80 area, and so today it's up to us to find to find out, wait and find out if the market becomes responsive. What's responsive? Responsive means the market moves the auction towards the most recent price, accepted price, right? So responsive today is buying. So we expect that the market is likely to shift back and retest this big area. That's the normal habit for a gap. Now, if it doesn't do that, that's a big clue. In volume or market profile, in my opinion, I've been doing this a while. The clearest indications on what the market could do is imbalance, right? Coming into imbalance is a great thing because when we come into imbalance, that's a big one. When we come into imbalance, meaning a gap, so something happened in the extended hours that caused the market to be out of balance with where it was. The market generally is looking for balance. It's looking for the maximizing buyers and sellers. We're looking for fat profiles. That's the ultimate aim of the market, is to balance and give us efficiency. When it's out of balance, what happens is we get an almost immediate clue, at least in the first 20 minutes of trading, on whether the participants see whatever caused the imbalance as irrelevant, in which case we become responsive like I'm drawing here, or the news or the impact is considered relevant. And then so what we do is we start becoming what's called initiative. We're initiating a move away from value versus responding back to value. Now imagine, what do these participants look like? Remember, even though machines may execute, humans make the decision. If you were short on that news coming into the market, chances are, if you believe or have indication or have a technical whatever telling you that prices are likely to revert back, then you're going to help make that move happen. You're going to cover that short, take profits off the table, and that helps push things, and that's what's called you're responding to the gap. But if you believe that you're either holding a position or not, and you believe that the price is actually still too high for the news, and that China's likely to retaliate, then what's going to happen is you're going to initiate a further short position, or initiate a short position, pushing price away from where the market has balanced. Now, we're not here by coincidence, people. The prices that we traded yesterday are not a coincidence. They are an active challenge by buyers and an active challenge by sellers to discover who is more likely to get paid on their expectation of the immediate future on price. That's basically trading in a nutshell. And the fact that we're moving away tells us a big thing. Anyway, I won't get too much into that, get too much into the weeds. So today we're opening up right up against this 27.80, 27.79, big area. Do we cross it, pull back, and then get an impulse? If we do, I'm looking to join to retest the naked point of control at 86.50 that you see here, this maroon line, and then the question becomes, do we breach into the prior day's range? If we breach into the prior day's range, then the target becomes the point of control, the most traded price from the prior session, 27.94 again. Does that price sound familiar from yesterday? That was yesterday's big stock zone and the beginning of a short into 27.9650. And that's the expectation if we start to break higher and become responsive. And the second most, no, so I said there are two really obvious indications in volume or market profile as to what the intentions of the players in the market are. One is a gap and what it does. The gap alone doesn't mean anything. We don't know if the gap is initiative or responsive. The second is a double distribution profile. And that's what we had, and we're in the middle of, that's what we had on Monday. A double distribution profile says the market liked these prices. It liked these prices, and so it formed this big distribution, and it's balanced, and it's wonderful. Then at some point, the balance was disrupted within the session, and it started to like other prices. And then what it does is it forms a second distribution. And what this does is it gives us a very clear, like we're seeing here, very important, gives us a very clear line between two acceptance areas. And once we break through that line, then we are likely to move to the point of control of the upper area if we're breaking from below into the upper area, or if we're coming in from above and moving down, you're going to look for, in this case, it's not a very good example, but you're going to look for the high volume node or the most traded price of the area below. That becomes a key target. So my job is to guess at whether or not we're likely to break the low volume node. The low volume node is an area that the market rejected. That was 27.79 from the bottom, and then we broke through to 84 and came back to 27.79 before we continued higher on Monday. I know I'm saying a lot and I'm saying it very quickly, but really important setup here that we need to be cognitive of. The overnight, ¿dónde está my overnight? Here's what the overnight session carried. So we finish up near highs yesterday on what is a very, very poor high. Here it is again, overnight high, day session high, and then we test it again in today's session overnight high, and then we break lower, and we break all the way down to 65.75, and we're holding, look at what it did, we're holding below mid for the entire session. We've been snaking around the VWAP, but we're holding below mid. This looks somewhat weak. This looks like long liquidation. This is a kind of a B-shaped profile here, long liquidation. The market's finding balance in this area. It's been imbalanced. The balance is valid overnight. However, because the underlying stocks are not trading, that balance or that value area doesn't really mean much. It's the S&P is moving in sympathy with global markets and is responding as a hedge instrument. So we want to see what the market does with that. And here we are, dead center on our point of control, the overnight point of control in the value range after the drop. And so what is the overnight session telling us? What is the overnight profile telling us? Diddly squat. It's not saying anything other than we can't even recover the midpoint of this range. So it looks weakish. The overnight inventory is almost 100% short. And we did push through pretty deep into the balance that we've had over the last couple of days. Let's get to it. So here's what we've done over the last couple of days. We've been in this rip-roaring buying run since Thursday. We came in on Friday, opened right at the edge of Thursday's range, and we went into a trend day. We gapped up on Monday, and we gapped up yesterday. So what we have here is an upwards channel. Wow, that is a horrible line. Poop, poop. And then today we're breaking that lower because we're trading down here somewhere. So we've broken this channel down, okay? And I expect that the market's likely to be responsive somewhat to balance out, it's likely to come back. The gray areas you see on the gray bands on the screen are my stock zones. Those are predefined areas that I plan to interact with the market on. Let's not worry about them too much. They guide where I'm likely to, where I expect the market to likely turn and where I plan to participate. Let's look at the primary scenario since I've been talking and talking and talking. Here it is. Opening in the range of Monday in the lower distribution. I expect an open that is likely to push through 2780. I expect a pullback 2780. I expect us to recover and retest the upper distribution of Monday. Okay, so the primary scenario is responsive. That is the most likely scenario given the imbalance that we have. However, I'm not a fortune teller. I have no idea who's sitting on the sidelines and who's doesn't have a position and has a big position that they need to hedge or whatever. The secondary scenario is an open test drive. Now, if we get an open test drive and we have an impulse down, I will not be looking at longs. I don't care what happens. As long as we hold that OS high, below the OS high, then I'm looking short only. I'm looking for a bounce here, and then I'm looking for to push the overnight low for the overnight stat and to get through this gap zone that we left behind on Monday. And the target on the short side is likely to be 2762 to bring us into balance of Friday's range. Okay, so neither of these is balanced. I'm expecting a push one way or another because we are out of balance on news. The market is likely to reprice. If it hasn't done so already, it is likely to reprice the most recent action. We've got a lot of, if you look at the deltas here, we've got a lot of accumulated longs here that are likely to hop back in. Many got flushed that are likely to hop back in or whatnot. So that's the way things are shaping up. I know it took a long time. We only have 5 minutes to the open. Good luck today, and I'll catch you tomorrow. Take care.